Hi guys, thanks for tuning in to another episode of Nuggets News. Well, it's a massive week, not only for global crypto news, we've got all that macro news we're going to get through as well, but most importantly, we've launched our new website. So finally, it is here, the long awaited platform. I know plenty of you don't like Facebook, but you wanted to get all our research and my multiple daily updates. Well, we've already had 500 register. So this is something we've been working on for 12 months behind the scenes, collective shift. So it's still powered by Nuggets News. You can head over there and meet the team. There's now 22 of us that have been working hard on bringing all this together. So there's a range of free resources, hundreds of units, and we're going to continue to add to that every day. So this is always a work in progress. It's going to continue to grow. But if you head over to nuggetsnews.com.au, you can click on become a member, and that is going to take you to this collective shift website where you can make a profile. If you're already a member, all the details are pinned at the top of the page on how to use the new platform. We've got tutorials in there. We've got different tiers of membership. Look, I will run you through it in more detail in a future video, but very, very exciting. Those 500 of you that were already busting to join us, obviously, welcome aboard. And to the rest of you guys, I'm really glad that we can finally have something really special and obviously become less dependent on some of those tech platforms which are always in our headlines. I do just want to quickly mention, especially Ben, who's been hard at it, but all the team. So these are our full-timers, and we had a bit of a celebration on Friday night as we launched that platform. So it's been hard, long hours, longer than normal, but we've finally got it there. So big congratulations to everyone, and hopefully we can actually have an in-person staff party once COVID passes us by. All our partners are on there as well. I do want to mention Troy and Kyle. They've been pumping out the content for you guys lately. They've also updated their website, so they've got their online trading course. That is one of the two that we recommend along with the chart guys. All the feedback's been brilliant. You guys know that we only partner with the best. So if you're interested in trading, head over there and check those guys out as well. We've got discounts for all our partners on the website. And a big congrats to a very special member who has been with us basically since the beginning, and to get these messages makes it all worth it in the tough times. And I think last week when crypto's booming and everyone's euphoric, it's great, but people forget about how much of a hard slog it was in crypto winter and when things are really tough. So to get these messages that we help people sell basically near the top with some of those DeFi coins that we picked with went up 100x, people being able to make that money to buy a house deposit in Sydney after moving over here isn't as an immigrant. Those sort of stories are just awesome. So congratulations, and hopefully plenty more of you have happy endings like this at the end of the next bull market. So let's get into the local news. We've had a little bit of a recovery in New South Wales house prices, but look, nothing across the board just yet. I think the data is showing, Martin and I will talk about this in more detail in our monthly episode, obviously, but payrolls and jobs starting to roll over, and that's in most states. That's not just a Victorian thing. Now, the big monumental shift this week was from the RBA, and as the headline says, it left more questions than answers. This is something that I predicted in our documentary that we created over a year ago, something that I've been talking about on the channel for many years, that the RBA, Australia Central Bank, would have to start printing money. They'll do a backflip like all these other central banks, and they're going to have to start to try and manipulate our currency. So if you've got savings, it is trying to weaken that purchasing power for the greater good. Now, they're being forced to do this because they were becoming the cleanest dirty shirt in the laundry, like I always say. So this is, once again, that example of everyone is heading down the same path. Australia and US were two of the best countries, and now they're going down that path. And that's why we're going to see these other assets, which we always talk about, continue to boom. So Crown Casino are in the headlines again. They're being investigated by Austrac over laundering breaches. So as always, it's all Bitcoin that gets the blame. But once again, it's the banks, the casinos. And this week we actually got an announcement that James Shipton, who's the head of ASIC, he's actually stepping aside. There's an investigation here about Goldman Sachs, who are in the news for another reason as well later on, but making these payments $100,000 a month for cleaning. So I'm not sure exactly what his involvement was there, but he's unfortunately stepping aside for this investigation. So it all comes back to what Commissioner Haynes said in the Royal Commission, that the trust is just gone in Australian CEOs and corporations, and it's probably a global trend, but very much in Australia, you'd have to say it's true. I want to mention this one as well. This made global news. Unfortunately, we've had 4 newborns die because of these rules where each year about a dozen babies are born in each state, or in Adelaide, for example, here, that require this heart surgery, and Adelaide don't have a pediatric cardio ward to do this, and because of the travel rules, it's just one of these things. It's just a tragedy in red tape. So I don't know all the details there, but surely common sense has got to prevail when things like this are happening. Global migration trends have plunged. Australia is probably one of the most reliant on that in the world. That is just tracking along the bottom, so no signs of that ticking up just yet. And we're still, if you look at the numbers, they're pretty scary in other countries still, which I'll get to in just a second. But over in China, we have had this big crackdown on regulators and property developers. Now, remember, they were responsible for a lot of the Australian property boom and a lot of that money that was being laundered and washed through the property market in that report. So that is them trying to, I guess, batten down the hatches, just like we saw in Australia, because of what it leads to ultimately, that bubble and that crash. So China back to normal. I'm not sure if it's exactly normal, but they're doing a lot better than the rest of us. So this article is about how they went about it, whether or not they got a bit lucky, or I think we're finding out more and more that there's this genetic component to COVID. But one of the things that I proposed, and this is a separate video I plan on doing, all about how China and other countries are going to start stockpiling hard assets. Because once the penny drops, that everyone is trying to buy stuff off each other for this fiat pretend money that we all print out of thin air, people are going to stop giving their stuff to each other. And China has made that chess move early. Russia, they've been stockpiling gold. Now they're stockpiling things like commodities. And copper's broken out to second highest price on record at a time when people would have said, we're going into a global recession and depression. Copper use is going to slow down. Now, this is something that you can trade as well. And if you have a look at the chart here, you can just see from the beginning of the year, let's go 1 year here, where price bottoms at around $2 a pound, and it's up towards $3.25. So huge moves in a market that's otherwise not normally too volatile. Now, the world is bracing for more and more of these food shortages as all the supply chains are strained. But one thing I want to get to here was all about the currencies. So in some places it helps you more with your exports and those commodities we just mentioned. But the Turkish lira has slid to another record low. Central bankers held their fire. A lot of people were disappointed. They thought these higher rates would help tamper down this just crazy inflation, but the central bank just doesn't want to go down that path. Now, this is a chain of events that leads to this totalitarian control, and people do crazy things when they can't feed their kids. Argentinian police here are raiding informal shops where you're allowed to exchange foreign currency. So it all comes back to this monetary system that's just not serving the majority well. And one by one you think, it's just that country. But it's creeping into more and more. And we've now got the RBA starting to print that money. I'm not saying it's going to happen there, but I wouldn't be surprised if we start to see capital controls. And we know they're trying to force us into that banking system. They need to implement those negative rates. It is really starting to move fast now, and that's probably the scary thing that even I didn't predict. Now, in China, we've got that credit impulse where they did spend a lot. Maybe that's going to help some of these other manufacturing economies like Germany. But it really is the same across the board. You look over to the UK, they're expecting these big jump in mortgage loan defaults. Half of Europe's small businesses risk bankruptcy within a year. ECB's gone, on their mission to revive inflation. So just like the Fed, they're now trying to say, hey, we're going to shoot for 2 or 3% or more inflation because we've undershot for so long. And when you have a look at their predictive power, they're probably one of the worst. Now, all the central banks are bad and they basically get it wrong about 90% of the time. when they forecast inflation, because they say, oh, it's going to get better next year. And all these black dots here pointing up, but just inflation never actually gets there. And here we are, we've crashed down towards zero. And now they're saying, we're going to target 2 or 3, 4%. The reality is they can't. Their hands are tied. They're not going to be able to do anything different. Now, in terms of this lockdown, there's some good and bad news. So everyone was talking about Sweden as the example. They didn't do any lockdown. Well, they're actually going away from that strategy now because things have got a little bit messy. But we've got some data out about this genetic predispositions, because it's not just an across-the-board thing. And I know there's a lot of people out there that still have got their mind made up and they're not going to listen to whatever I say, but there's some really good data now that's starting to paint a picture about it being more of an autoimmune disease. People with autoimmune disorders or on autoimmune drugs are showing up far more often in the hospital system. And so that's a good and a bad thing. It does solve the puzzle about why some healthy people are getting it, but it also tells us that those people that are really unhealthy and have those autoimmune diseases or both are far more likely to end up as hospitals or the high care wards, all that type of thing. So something to be mindful of, but it is good that we know more. What we are now finding though is that we've got to the point, this is past 6 months, where it's the mental health, it's the business, it's the economy that has become more important now, and that is starting to really hurt. And we're seeing statistics, the suicides and that sort of thing, which we don't want at all. So I think that there's no good plan that we've got here from our leaders. We need to be having different conversations. I will keep saying it, but listen to the health professionals, because like me, most of them are sensible people that have gone into protective mode. Now we've got that data, and now it's time to reopen and do it safely. So has America got a COVID problem or an obesity problem? I've spoken about this on the channel. They've got 40 or 50% or more if you include overweight and obese, diabetes, heart disease. Of course, that's why we saw really high statistics, really high blood sugar levels these days. Some people do consider that almost an autoimmune component to it. And when we saw those huge numbers in New York, New York is known for that, the big food, the sugar or the junk food. And maybe I think there is a correlation there. And so let me know what you think about all that down below. In terms of the economy, so 2020 retail sales bounced back quite well in the US and Eurozone. A lot of that is stockpiling goods and preparing for around the home. We've got Nancy Pelosi telling the White House they've got till Tuesday to get this relief deal across the line, but obviously that didn't happen. Funnily enough, the market just shrugged it off. I'm going to talk about at the end of this episode where I think this is going, but I would think that is a concern. If we have a look at the unemployment claims, they have been going lower, but for all the wrong reasons. So if we actually get more granular, we can see that some of these, what's the title of it here? The primary pandemic unemployment assistance. So a lot of workers are sort of going onto these different programs. Some of the state programs have got a week lag from when they get counted. So this picture isn't quite as good as some of the headlines made out. And there's still plenty of people, look at these lines. Millions of people in New York that can't afford food. Just like those other countries we saw, it is now starting to happen in these countries where you would have never thought it possible. And obviously the law enforcement, the powers that be, we've already seen them bracing for all of this for years and years. So planning for the worst. We've got that election coming, and that's, I think, what they're really fearful of, because it is such a division. And social media is to blame for a lot of that. Existing home sales spike, a lot of people getting that turnover, getting out of the cities into the country. We have seen a little bit of a downturn in shipment, but one thing that's really promising is some of the ocean and those shipping containers that are booked out for months and months. Again, I think that could be another little breadcrumb about China stockpiling a lot of goods. Apartment rents are plunging. Now, that is good news for those of you that are in New York and these expensive cities around the world. But a lot of those are packaged up into those CLOs, those fancy investment products that are about to unwind. A lot of people now, more and more, the big companies telling their staff that they can permanently work from home. Pressure on New York commercial real estate investors are worried. So it's the big pension funds. They own a lot of these assets. The US commercial real estate showing first signs of life, maybe a little bit of a bounce as the first low-hanging fruit goes back to work, but I don't think you can say that it's recovering and it's a trend at all. And another huge component of all those CLOs, collateralized loan obligations, whether it's the commercial real estate or these energy producers that are having to lend that debt, and then we get these investors buying it all, they're really starting to collapse. So we're seeing a lot of mergers and acquisitions, just like we saw in the gold cycle, just like we saw in the crypto industry as well, really. Now, different headlines are obviously exaggerating this to some degree, but the whiteboard video I did for you guys, please check that out. It was one of my favorite videos where we spoke about the price to produce oil and which producers are going to go out of business and why. A huge acquisition here, $9.7 billion to create a shale giant. So this is a big part of the US economy these days, and they're going to try and subsidize it, I believe. Well, obviously that depends on who gets elected, and geez, hasn't that been another point of contention? But I won't get into all that today. We've got a lot of people talking about the renewable path, but remember, this is such a huge component of the economy that it's one thing to say you're going to go down that other path, but when it's real jobs and real people politically, it's always hard to change. Now, sovereign wealth funds, they have lost that appetite for real estate investing like I spoke about before. You've got to remember though, when all these big funds have invested in these products, when a lot of them try to sell at once, if you've got to try and realize that money, there's no liquid market there. You can't just dump $1 billion of apartments onto a stock market by pressing a button. You need to try and find a seller for those. And that's where we can get in a lot of trouble really quickly. That's why the Fed bought in BlackRock, to try and help with all this restructuring, because this is getting really, really messy. Look at in terms of the trillions of dollars compared to back in the GFC, where we sit now with the high yield debt, different global loans. We're so interconnected here, the emerging markets, private credit, and then we've got the shadow banking system, China, even things like buy now, pay later, so much different versions of credit and debt in the economy. So this is the Fed's balance sheet, where it has started to tick back up after many, many weeks of not a lot of action. So they have intervened in the treasury market. We've got those yields just starting to tick up. And remember, the Fed have welcomed inflation. Most central banks have now, and they're playing chicken with that high yield market. Because it's one thing to muck around with the treasury yields when they're at zero or negative and you're trying to get a little bit of inflation in the economy. But these big indebted companies or households, these junk bonds, you can't just try and, the high yields there, that is going to crush a lot of companies. They can't afford to pay 7-9% on that debt. They can barely afford to pay 1 or 2%. We've already got 20% of these companies that are zombies with this record low yield on the debt that they're able to sell at the moment, and they've been issuing it by the billions at the moment to try and lock in those low rates. So a hawkish Fed is creating a lot of buzz in different parts of the market rate, like I just spoke about, talking about hiking rates in 2023. People are now starting to place bets at different parts on the yield curve about when and if we will get inflation and how bad it will be. A lot of money is positioning in the currency markets and US bonds markets at the moment. The S&P 500 rally is powered by assets that you can't see or touch. So really important, once again, people like China stockpiling commodities and hard assets. Whereas think about the US and the percent of the stock market that's now made up of, the FANG stocks, all these software companies, social media. Is that any real productive value with the kids staring at the screen all day? I think you can see where I'm going with this. And at the moment, the Western countries are not really savvy. They're not thinking about this at all. And how long is it going to go on where China can just stockpile all these assets? Now, some of the chess games are continuing between, Huawei and Trump. They actually managed to hoard enough of the chips that they need for the 5G technology. So Trump won't be too happy there. we're seeing a lot of these blank check company deals driven by speculation. So this is what they call the SPACs, where investors are just saying, hey, everything's hot at the moment. Here's a blank check for $1 million. Just get me into some of these early stage deals. And that's as crazy as it sounds. And that's the environment we're in, where there's too much money sloshing around the pockets of Wall Street. And here we are with millions of people going hungry. And there's this debate. The stimulus has been pushed back and pushed back. It's all about pride and getting up in front of the camera. And it is nuts. If this was happening in Australia, I think I'd be angry. I'd be trying to do something about it, get people to wake up. And that's what I think we are going to see in America in the next 2 weeks in particular. You cannot have this situation where Wall Street is just literally giving away money and other people are losing their homes, losing their jobs, and we're debating about whether or not we should give them 1.6 or 2.2 trillion because we're just both being too stubborn. It is really nuts, and I think it's going to all come back to haunt them. Sweet talking CEOs are starting to outsmart robot analysts. One thing I made a video on was about high frequency trading and buzzwords, how that's overtaken the market. And what they've now worked out, it's almost like reverse engineering. So the CEOs, firstly, we speak about with earnings reports, when they lower the target and then they manage to just beat it. And again, they try and fool the market to think, oh, it's a beat. It doesn't matter if it's 90% lower than what they made last year. It's you beat your earnings estimate. Now they've taken that a step further, whereas they know there's certain keywords that the algorithms are looking for. So they'll use those words in a deliberate fashion to try and get the algos pushing the stock market higher. Look, this is the game of investing that we play at the moment. It's just all smoke and mirrors. Tesla have got some accounting tricks up their sleeve. Yeah, they have posted a 5th straight quarterly profit, which is great, but a lot of these regulatory credit sales, again, it's not a sustainable path. Anyway, I just think that Tesla is going to face a lot of challenges, but for the time being, it is a very loved stock, albeit controversial. Netflix. Everyone got Netflix when COVID hit and everyone was at home. Now that has slowed down, and a really disappointing outlook from them for the investors, and they actually missed on the earnings per share as well there. Now, the big end of town, the big tech stocks. I think a few months ago I said that they are going to get dragged in front of Congress and the Department of Justice, and now it is happening. So they are suing Google in this antitrust case for abusing their monopoly powers. Look, Google and these big companies have got as much money as they want and need. They've got the best lawyers. You cannot tell them to do something. They're a private business. They'll just say, like we're seeing in Australia, well, stuff you, let's just leave Australia. They might say that in the US and go elsewhere really aggressively after developing nations where they see a bigger opportunity. So they have the power as much as the governments like to pretend they do. I just don't see big tech losing this. And the only way that we're going to win is with the decentralization, the cryptocurrency, the blockchain. Let's get social media. Let's get our data, search engines. It's got to be decentralized where we're in control of that rather than the corporation, the company, the individual, for profit. So Senate Republicans are voting to subpoena Facebook and Twitter. Exactly like I just mentioned, they're going to get up there in front of the Senate, and like we saw with Zuckerberg last time, all the wrongdoings come out, but does anything really change? Not really. Now, this is interesting because more and more it's legitimate, mainstream, big coverage. Bitcoin breakout, leaving Amazon, Apple, Facebook, Google in the dust. And they're the sort of returns that people are going to start to hear about. Day trader Dave, when all the tech stocks are flying. Well, now it's the cryptos and the altcoins, and I think that's going to bring that crowd over to crypto to start to speculate as well. Trillions of dollars on these fighter programs. This is what we've seen in the past. If you're a student of history, this is really significant in terms of how we went down the path of getting off the gold standard and having to fund wars. Trillions of dollars on these planes when there's millions of people going hungry. Something has got to give. We just can't keep going down this path. This is the deficits. You can see how noticeably bigger 2020 is down here, over $3 trillion. And here we can see the different outcomes. So the clean sweeps of the Democrats and Republicans, and what that's likely going to mean for debt to GDP, how much is going to get spent. Here's a clearer visual estimate here of the Trump versus Biden and the different impacts of that deficit by the trillions of dollars. I think people are now starting to price in, that blue wave that they're talking about. So Trump's going to keep doing his thing, and he was already spending tax cuts. But I also think that Biden and that crew are going to spend probably more money. So that's why I think Wall Street is starting to creep higher, because to them, it doesn't really matter who gets in. I think in a lot of ways, it's just about, well, where do we park our chips, our money? We've got plenty of it. And we know both of them are going to spend big, so it's just about what it's going to be spent on. Net positioning among asset managers in Treasury futures contracts. This is the 10-year futures and the longer dated bonds there. So we have had these decreased holdings. Now, what's most interesting here, though, is the DXY, the US dollar positioning. So this a little while ago, we had the biggest short position of all time, was it, at 32%. That's since flip-flopped in, what's it say here, in the matter of a month. So now they're actually overweight the dollar. I think this is all to do with the ECB now talking about pursuing that inflation. What we've seen with these other countries holding off the pulling the trigger on rates, the RBA, Australia, coming to the party. So all of a sudden it's not just the US, and a lot of money is being repositioned there at the moment. This is the percentage of global bonds with negative yield. Now, it got down to, 10-15% at the start of the year. One of my predictions was about how I did think it was going to get back up to where it was last year. So in percentage terms, we topped at about 30%. We're only back up to about 25%. I'll get to the next chart in regard to that in a minute, but tying this all together, it's really important to understand that this negative yielding debt and going to the safety of the US dollar, this was all part of that classic 60-40, you just rotate between your stocks and your dividends and your bonds, but that has changed forever. So the things that were meant to be the hedges are now risky. You don't want to hold those US dollars like we've seen with the big companies. You don't want to necessarily hold those bonds. So where do you go? You've got to look for these other asset classes, and that's why people are continuing to turn to Bitcoin and gold. Now, excuse me for a second while I blow my nose. Upon request from you guys there as well, sorry about the sniffles in I think it was my super DeFi tutorial the other day, where I tried to push through it, but I will have a sniffle break. Okay, so this is the Grayscale Investment Trust alongside gold. Most of you are probably aware that the gold ETF continues to have record amounts of money flow into it. But now crypto and Bitcoin is being recognized as that legitimate asset class. So it's kind of funny. I had to laugh when I read this headline from a crypto news site saying that gold is going to be devalued because the world's biggest reserve has been discovered. And you read that and you'd think, oh, wow. But drilling into the numbers, pardon the pun, 0.5% of the total gold supply. And that's probably going to take 10 or 20 years to dig up. So maybe 0.05% of extra supply of gold each year, is absolutely nothing. You guys know that I love both. One of our products that we do is this precious metals and macro report. We love gold, we love silver. We want to bring you guys that information on the metals, the ETFs, the stocks as well. So we've got a mining engineer who we've partnered with. Over to the website again, you can see all the different reports that you get on the different tiers. And legacy members, you guys know that you honorary get all of this. So you're very lucky indeed. So this is the next slide I was talking about in terms of negative yielding debt when we look at the absolute numbers. In 2017, it hit $9 trillion in the Bitcoin bull run. And Bitcoin peaked at 270 billion market cap, about 3% of that number. So now we've got back up to 16 trillion. 3% of that would get us a 480 billion market cap, $26,000 Bitcoin. But I really think that Bitcoin has matured as an asset class. We've got fund managers literally saying, hey, we're in Bitcoin, our clients are in Bitcoin. Fidelity telling people to buy 1%. A dozen or more listed companies now all parking their money in it. So I think realistically, if we get to whatever figure it is, whether it's 16 trillion or 50 trillion in negative yielding debt, it's going to be a far higher percentage that say, you know what, let's sit in gold, let's sit in Bitcoin. That's why these numbers are going to continue to go up. And if we got to 30%, a tenfold increase from 2017, then that would give us that Bitcoin price of around $240,000 a coin. So look, I think that's doable within probably 10 years, I would say. Again, Bloomberg in the headlines, Bitcoin approaching 12,000. We spoke about how once we get over 10, it would be everywhere. Paul Tudor Jones says that he likes Bitcoin even more now. He didn't realize some of the technology aspect of it. And it's when people say, hey, is it too late to invest? One of the world's most legendary investor fund managers has just said that it's in the first innings. So when you hear me say, I think Bitcoin's going to 100,000 in the next 5 years, some people laugh. People laughed at me when I told them that Bitcoin was going to go to $30,000 in the next 5 years. That's when it was $30. And it got there in, 3 years, 4 years after that? Still at a low market cap. All that money out there is going to push things higher. Michael Saylor, he's coming at it at an even different angle again. He's talking about how with the cash flows of these risk-free equity asset classes would need to grow faster than the rate of monetary expansion to serve it as a good store of value. So what he's saying here is even if you have that stock that's paying 7% dividend, it doesn't matter if you're getting paid in US dollars if they're printing 14 or 22% more US dollars again like this year. So he's just arguing that no matter what angle you look at it, Bitcoin is a better investment. And this is where that wave of money is coming that people like Raul are talking about. This is the Euro banks. We know that low interest rates are hurting them. When we look at Christine Lagarde, she's talking about these different tools, urging this recovery fund as a permanent tool because those banks basically need inflation to survive. Those banks cannot withstand another couple of years of negative interest rates. They're going to explode. We look at the US banks, those FinCEN documents, Goldman settling for $2 billion. So the banks are, once again, they're out of favor with the regulators. Central banks would love to replace them and get rid of the commercial banking system and have everyone with their own account so they can control it, exactly like we're seeing in China. The Fed may be stuck with this stimulus forever. There's no way they can get out of the QE. We saw exactly what happened. They weren't able to ever taper off all that spending. And basically it was always infinite, but it was just left unsaid. And that's what Joe spoke about in the Jolly Swagman podcast in that interview that we did together. So when you've got the IMF coming out, it's almost like we've exhausted all our options now. And so they're starting to look for these excuses, whether it was climate change or COVID. We need a Bretton Woods moment. We need a system reset or whatever they're calling it. And yeah, Ian McFarlane, the former head of the RBA, he told you that this stuff was, he thinks, coming because monetary policy wasn't as powerful as most people thought. Simon Dixon and I spoke about this in a number of our chats and our catch-ups over the years. The war for control of money has begun. So this was back in April, 6 months ago now. And boy, oh boy, isn't it clearer than ever that this is the case. This is where it's at. Okay, so we are into the crypto news. And for those of you that just watched the crypto news, I will remind you about our new website. So crypto, head over to nuggetsnews.com.au, click on join, become a member, and it will take you to the Collective Shift website where you can have a look about it. All the features, and all of you that have been waiting, you should have got that email about how to join now. Okay, so in Australia, we've got the National Stock Exchange is looking to get onto that blockchain settlement system. So it's not actually the ASX who are also looking to do that, but the NSX looks like they're going to take the lead there. New Zealand have followed in Australia's footsteps and said that there's no plans for a central bank digital currency. So we seem to me like we're the only two countries that aren't interested in doing that at the moment. I did mention this before about ASIC chairman getting fined. Ripple board member and Trump associate arrested for cyber stalking charges. So Ripple seem to have a lot of strange news, don't you think? I know I seem to pick on them, but hey, I think they bring it on themselves. The big IMF meeting as well this week. Of all the projects that you would have thought would have been there, you would have said XRP and Ripple. Now, IMF have come out and said that they don't really see this potential, a little bit like Australia and New Zealand, but hey, I completely disagree. The Fed have said that, oh yeah, there's something there. We're not in a rush. We'd rather get it right. And it was this old, we're all evaluating it, is what they wanted to say. Almost to make it seem like when China beats them to the punch and all these other countries, that they weren't actually beaten because they were evaluating things. Interestingly enough, as I just mentioned, the Stellar CEO got to be part of that panel. So for the XRP holders, let me know in the comments below. I seem to always hear about how they're in bed with the IMF, and yet here we are with the Stellar CEO getting invited, and no mention of XRP in that stream that I watched, at least anyway. So global leaders are all talking about the different standards. I did mention that. Hopefully some of you watched that live stream. But China's central bank digital currency is laying this regulatory foundation. But I think they very clearly don't want anyone else to be involved. So at the moment, we do have some digital versions of the yuan. And what they're saying is that they want that outlawed. And you can't... Well, it's going to be interesting to watch them try and ban that, because projects like Synthetics have got a synthetic version of the digital yuan, and there's no way to stop that. So this is maybe a little bit of foresight if the US dollar ever went after all the USD stablecoins. Well, they can't actually stop the decentralized ones. First users are not impressed by China's digital yuan. So I don't think there's any surprise there. It's all going to be talked up, obviously, particularly by them, but it wouldn't surprise me at all if there was heaps of bugs and nothing too impressive compared to the Alipays, all the other apps that they're used to. Over in Russia, the digital ruble must ensure privacy but not anonymity. So interesting from Russia. Obviously, they want to keep a toll on what everyone's doing in their currency as well. And it could be used as a tool to get around sanctions. So that's exactly what I think the US want to hear, isn't it? EU banks, and this is the HEX trust team. So this is not the crypto project HEX, don't worry guys, but they are teaming up with SIA for crypto custody storage. It's the European banks this time. Last week it was the US banks. Everyone can now hold in custody crypto. Germany coming out and saying that it threatens our currencies and our financial system, with everyone having these CBDCs as a store of value. So the reason that I think that's interesting is that they're not a store of value. You wouldn't hold your wealth in fiat currencies. That's not the sort of things that hold value. So that's why this argument is more to be used against something like Bitcoin, where you have that fixed supply. Japanese messaging giant Line are developing a platform for a CBDC over there in Japan. Mainstream media talking about, hey, DeFi, it's inevitable. Comptroller of the currency in the US this time saying this. So I think they're admitting defeat in some ways and just, let's embrace it. It's coming. AML watchdogs, they want to change these rules, is it FATF rules, from, I think it was the $3,000 threshold down to $250. So they want to know what everyone is doing, sending between accounts and exchanges. I think that's pretty ridiculous. I mean, do they know what everyone's doing with $200 of cash when they go out for a night out or something? So you got to draw the line somewhere, and I'm sure that's going to be fought pretty hard. The Department of Justice crypto framework is an absolute disaster for digital privacy rights, and these are the rights that we're going to have to fight very hard for in the coming years. Visa and MasterCard have been accused of excessive fees. All these fintech payment providers, they're just middlemen that are going to be made irrelevant. CZ's come out and said that central bank digital currency could threaten Bitcoin. I think he was misquoted here, but either way, I don't see them as a threat at all. It's a stepping stone to get people into Bitcoin. $500 million of tether has been minted in the past 36 hours as Bitcoin rallies. Now, that has always been a little bit of a precursor to money entering, because people put their money into these exchanges. A lot of the time it is through the stable coins. And as you can see here, they went wild the days before Bitcoin's recent run up. So this is some data from Crypto Quant, very cool site. But this is something we've been focused on for months, or some of you guys in the group I know, years. This is a write-up I did back in April talking about how we'd had this huge increase in the amount of stable coins on exchanges. I think at the time Bitcoin was trading for around, was it maybe $5,000? I'm not sure. But anyway, it did lead to a big rally as that money went from stable coins into crypto. Brazil is prepping an IPO for its state-run digital bank. We've got the Bahamas have actually launched their Sand Dollar. So they're officially the world's first central bank digital currency. The big news of this week, though, was PayPal coming out and adopting and integrating crypto. So they are not going to let you hold your own keys. So it's a step in the right direction, but it's for beginners. Obviously, I'd prefer if everyone learned how to use a wallet and control their private keys, how to have password and online security, all that stuff. But the reality is a lot of people are going to want someone else to do it for them for that first step at least anyway. Now, there's rumors going around that PayPal are going to look to acquire other companies like BitGo. Litecoin surged. It was one of the currencies named. So it wasn't just Bitcoin. I think a lot of people sort of missed that. Ethereum, even Bitcoin Cash. And I think it's no coincidence that Grayscale added a Bitcoin Cash and Litecoin investment trusts a few months back, if you remember that as well. But you've probably heard it already. PayPal, 350 million active accounts, 26 million merchants. This is huge. This is getting crypto under the noses of just about everyone. I already mentioned this, looking to buy Bitco. This was on Bloomberg again. So you just cannot avoid crypto. It is under the eyeballs of those with money. In terms of other acquisitions, we've got Justin Sun is looking to acquire an esports platform for streaming. Now, he has got all the money in the world, a bit of a copycat in terms of technology, but that acquisitions and partnerships don't make success long term. Think about EOS, and I tweeted this during the week. They raised $4 billion, and that was 3 years ago. They had all these big VC backings. They were so much better than Ethereum. Community awareness, everyone was talking about them. 3 years on, I know most people watching this video would not be able to set up an EOS wallet. How the accounts work once you've got to set up a wallet, then you need to have some EOS in there for RAM, delegating, staking, the leadership. You just don't see Dan Laramie out there talking at all like you see Vitalik and others about their projects. Voice their social media platform, which the world is begging for at the moment. I think it's been a bit of a flop. I don't know anyone that's using it. I checked it out. It just wasn't that great at all. I know you got to hit critical mass with these sort of things, but most people here said, they don't think that you can get this back on track. And funnily enough, this tweet here was saying the first project that came out was listed on EOS VC was actually an Ethereum token, which you can use to buy a course about how to program on Ethereum. So this is some of the EOS community getting pretty upset with what's happening over there. Another universal basic income project that's been going around this week was called Circles. So this is where you have to verify other people you know. Some of these normally border on sort of Ponzi's or scams, but this one does look to be legit. It's on the Ethereum XDAI sidechain. You do have to give away some details when you sign up, your emails and that, but maybe a bit of an experiment to see if you can get some universal basic income. But remember, money's not free. It doesn't just come from somewhere, and that's what has me a little bit cautious when I hear these things. Crypto domain owners can now be verified on Twitter. That's great. I seem to have fake Twitter profiles every week, and Twitter just never give me that little blue tick no matter how many times they say that I'm going to get it. Rapper Akon has partnered up with another platform called Roll. This is another social crypto platform. Seems to be plenty of these lately. Minds is another one that I share all my content on every week. and they just took another big step towards becoming uncensorable. They've uploaded all the file storage to Arweave, which is a blockchain-based cloud storage solution, part of that Web3 DWeb narrative that I've been talking about a lot lately. Audio token on mainnet. So this is great to see, music artists starting to get this airdrop and just building out into these other industries that probably had no interest in crypto, but now they do because it's come to them with a solution for a lot of the problems that they do have. Sorry guys, nose blow round 2. I'm sure it beats listening to the sniffles though. Okay, so Pool Together have had a big upgrade. That is the no-loss lottery. Because there's such attractive yields in the world of DeFi at the moment, the version 3 that they're going to come out with is going to have massive payouts for the winners because of how much rewards the pool of funds can get even in a week from everyone betting. Ethereum betting market, this is Poly Market. They've raised $4 million. We seem to have a lot of prediction markets lately around the election, if you love to have a pun. NFT demand in Q3. This was just enormous growth, very similar to DeFi. It seemed like Q3 was the quarter that everyone just discovered that these things even existed. And there's been people out there like Maddie that have been passionate about them for years. A good bit of feedback. Look, Maddie's obviously heavily involved in Decentraland, and some of you said, oh, he's too biased. Look, I'll pass that on to him. I'm probably biased towards Ethereum and my favorites. But look, I do love that monthly update. We do cover all that stuff. Maddie's doing some premium research for us as well, for those of you that do become members. Big bit of news from Red Fox Labs. So this is the token swap that some of you guys have been waiting for. So depending on when you watch this, it might already be live. If you're on the Liquid exchange, it'll happen automatically for you. That market will start trading again. So sign up to Liquid. If you use my link or Benny's affiliate link, they prioritize you for getting approved and verified. But it is a good exchange. It is a reputable, trusted exchange, and one that I have started to use as well. If you're a token holder investor and you've got it in your own wallet, in the Verus wallet, you can use the mobile wallet. So put your private key into the mobile wallet, and it should have a button that says turn your RFox tokens into Ethereum RFox tokens. If you've got the desktop version, I think that is coming. I'm not sure if that's just hours or days away, but there'll be a button on the desktop version as well. We're going to get some pools going. I'm going to help Benny set up those with the Uniswaps, the Kybers. It's very easy to do. Anyone can really do it now. It's an ERC20 token. But what I'd say is don't buy anything. There's going to be so many scams and fake tokens out there floating at the moment. So just keep an eye on the official channels for any more info there. Uniswap's first governance vote had an ironic failure. So they needed 400,000 signatures, was it? Or 40 million, sorry. And they were short by 400,000. So kind of funny that they wanted to reduce the amount of people you've got to get to vote, and they couldn't get enough people to vote to reduce the amount of people you need to vote. Yuan Finance, they've put out a bit of a manifesto with this leaderless vision. Since Andre's taken a big step backwards, I think Yuan have had a decent bounce this week and still got a lot of promise ahead of them. PowerPool is another good project that's like an index meta governance protocol for all the different governance tokens. So you can head over there and read about that one if you like. Now that is live, partnering up with Matic. A lot of people talk about DeFi being over, Bitcoin and Ethereum taking the reins. Look, I think that if you actually look at the stats, DeFi has continued to grow. I think the good projects are going to keep going up. There's still plenty of good yields. Look, it's all slowed down a little bit, but there's going to be demand there. Stable coins are going to continue to grow. As things get moving again, people are going to want to trade more. I just think it's the first sort of cooling off, the first correction, the first leg up in that big major bull market that we've started. Ethereum's the first blockchain to settle $1 trillion in a year. We know that it's absolutely smashing Bitcoin in terms of the value and the transactions these days. We had a bit of a hiccup with the 2.0 testnet, and we are going to push that deposit contract back a couple of weeks until November. Casper Labs have raised $14 million for a day node runner. So this is going to make it a lot easier for people to run these proof of stake nodes. But this tweet that I sort of came to me the other night, I said, look, the maximalists, they're very vocal, but betting against Ethereum is just a bet against the innovation. Thousands of the smartest minds, all walks of life, all different sort of experience, working towards this common goal, digital infrastructure. It's open to everyone. It's everywhere and nowhere, so it can't be banned. It's providing solutions, more importantly, to all these challenges that are being put in front of Congress and the Justice Department. Don't wait for the government to fix it. You'll be waiting forever. We are going to build the future together, and anyone can build on Ethereum and these other protocols. It's a free world out there. I'm all for free markets. Zcash has come over to Ethereum as well with its wrapped version, which is very, very cool. We've got Financial Watchdog actually slapping a $60 million mixer for money laundering. So this is the Helix and Coin Ninja Bank Secrecy Act. This is getting interesting now because there's a lot of mixer services out there. Some of them, they know who the owners and developers are. Some of them are decentralized and they don't. So can they go after them? We've got things like this, no KYC lending options for some hodlers. So where are they going to draw the line with all this happening? Now, I think that this is one of the biggest backflips we've ever seen. Think about Jamie Dimon and JP Morgan and the number of times he called Bitcoin a scam and a fraud and said he'd fire anyone that got caught talking about it or whatever it was. And now JP Morgan have put out this big report about how there's this tremendous potential and long-term upside for Bitcoin. I think in the middle of crypto winter, one of the things I said was that these guys are going to talk it down, and once they've built the infrastructure to profit off it, charging clients fees for storage, custody, and purchases, trading, then they'll start talking positively about it. Good things take time, and it's played out exactly as we predicted. I spoke about this one before in the macro section, but Michael continues to make the case for just no comparison. Bitcoin is the best asset for this macro world that we're in. Paul Tudor Jones telling people it's like investing in Apple or Google early. People listen to these investors when they talk. Another UK firm put in 10% of their cash reserves. Look, it's only a smaller amount this time, but it's death by 1,000 cuts. And I said to my group the other day, I did a write-up and I said, yes, it's buying Bitcoin each time, but you've got to think about it as saying no and selling or even refunding your fiat. When you give that money back to a bank or back to the government, you're saying no. You're asking for a refund and in turn you're taking Bitcoin. Another interesting development is the options market. So someone bought 5,000 of the $50,000 Bitcoin calls. So what this is a bet of is basically you think Bitcoin's going to be above $50,000 by the end of next year. So it's a very, very aggressive bet. Some of the on-chain data and the metrics that we've been looking at, look, Glassnode and Sentiment are going to also produce reports for our premium members in our new platform. We saw active supply on exchanges just absolutely drop lately. This is the liquid Bitcoin. So like we spoke about in the flash crash, there's just not a lot of Bitcoin on exchanges, which can be a good and a bad thing. But it's being bought up. There's not enough Bitcoin to go around once this bull market starts, and that's already becoming apparent. I want to mention a couple of charts that I shared recently as well, because I've got a few questions about this, particularly in my group. So, look, this is big picture. This is a 12-hour chart here just to show that we've been painting these nice bull flags and heading higher. And this bull flag could go for another day or so, but I think this is the measured move that takes us another 15% to $15,000. So I think this is on the cards unless stock markets roll over and things get really nasty there, which is possible with what is going on at the moment with some of the COVID numbers and uncertainty around the election. But if we get some sort of deal or stimulus, then I think stocks rocket. I think Bitcoin follows through here, up towards at least $14,000, if not $15,000. Now, this is a pretty big zone here. So the next day, today, I said when I was watching the screen and doing some trading, be cautious here. this zone here, a couple of wicks in the short term, a little bit cautious until we get over 420 for me. And sure enough, less than an hour after I posted that, we had a pretty steep, or small but steep sell-off. So let's just bring that up here and I'll show you what I'm talking about. This is a 5-minute chart of that dub. So I posted up here. This is that dump that we get. And some people getting upset saying, you were bullish and then you posted this saying be cautious. Well, if we actually have a look at the chart, if I got my drawings on here, no. Well, what I wanted to show you here was, let's bring up the 12-hour chart. Short term and big picture can be different. So a lot of the time when I do my updates, guys, it's for the trying to keep me up to date with what some of the traders are watching or thinking. So look, when we have a big sell-off like that and I say be cautious, it doesn't mean that we're necessarily turning bearish. We had a crack at going high here and failed. Crack here, failed. We've had another crack and I said be cautious. It doesn't look like we're going to get up here, particularly on Ethereum. And sure enough, we failed. So it's not the end of the world by any means. In the big video I did on Friday, I spoke about how these patterns, even when they fail, their pennants or their triangles, they can turn into these nice flags. So that's what I'll be watching next. And we're still even in the middle of that flag. So I'm not sure why some people are so panicked saying, oh, you're bullish and bearish. Well, when I'm talking about short term, a lot of the time it's for day traders. I did a clear write-up saying if you're a hodler, you don't need to even acknowledge or stress about the day-to-day movements. If you're a trader and you've had a good run here, take some profits, because this might also turn into some sort of flag. And I'd love it. I think 12.5 would be a really nice entry, appropriate place to pull back to. We would look deeper if the stock market gets nasty, as I said, but when we're talking about big picture, just have a look at this weekly candle. We're now above all the resistance that we're worried about. It's only really that 14K, and then getting towards 20K there, maybe a little bit at 16. But we've just ticked off one by one everything that you could have asked for the bull market, and some people are still stressing. So look, just enjoy the ride. Don't worry about those day-to-day little volatile movements, because the whales are going to try and throw you off because they missed a lot of this move. And when we get these fake breakouts, temporary pullbacks or whatever, you've got to hodl if you're that long-term investor, and don't stress out. So look, watching the US dollar, watching gold, watching the stock market to see how that reacts with all the election news and the stimulus. But a very exciting time. We've had a great run. Hey, I'd love a bit of a correction to buy more lower, but I hope you guys have enjoyed all that. Don't forget to head over and check out the new website, Collective Shift, that platform that you've all been waiting for. So smash the like button, subscribe if you haven't already, share these videos around, and we'll talk again soon. Cheers.